Want to buy a bike, car, or looking to start a small business, but finding it difficult to get a loan? Not to worry. RBI has now made this easier. Let us understand how. In its recently held monetary policy on 8th June, RBI announced no change in policy rates. But was this MPC insignificant then? No. In fact, this was a very progressive policy. RBI made 4 key announcements that further strengthen India's position as a digital superpower. RBI has allowed FLDG between bank and NBFC and FinTech partners. This will deepen credit and digital lending. Use of RuPay Forex cards for overseas transactions. Issue of e-rupee vouchers by non-bank PPI, that is prepaid payment instrument issuers. Bharat Bill Payment System membership rationalization. In this video, I will explain FLDG in detail and how it will change the face of credit and digital lending in India. To understand this, let me tell you a story of my friend Mohit. Mohit is a YouTuber and loves traveling and making vlogs. One day, he saw a new sports bike and decided to buy it and show off on his YouTube channel. So he went to the bank nearby for a loan. The bank said, okay, sure, but do you have a credit history, a collateral, or last 6 months salary slip so that you can pay back our loan? Well, Mohit was a bit disheartened as it was difficult for him to provide any of these. However, he did have a small source of income from his YouTube channel. As for the banks, they are hesitant to extend loans to such high-risk categories who they consider will be unable to pay back their loans. These also include individuals with limited credit history, micro, small and medium enterprises, and people working in the unorganized sector. So now, what should Mohit do? Here's where FLDG arrangement will come to his rescue. FLDG stands for First Loan Default Guarantee. As the name suggests, it is a guarantee by FinTech, also called Loan Service Provider (LSP), to compensate the bank or NBFC up to a certain percentage of default in the loan portfolio that it sources from them. Let's first understand how banks and NBFCs, known as regulated entities, and FinTechs, known as LSPs or loan service providers, work together to extend credit and loans. While banks have the capital and license to lend, FinTechs have the technology and client reach. Banks and NBFCs, despite their branch reach, are not able to cater to a large chunk of Indian population due to insufficient KYC or limited credit history. This is where FinTechs come in. Many of them have built a large base of alternate data set that can be used for lending. So the FinTech sources the clients or the borrowers, and banks or NBFCs lends. Now, to ensure quality of sourcing and skin in the game, the FinTech guarantees a part of the loss to the bank in case the loan goes bad. In an FLDG arrangement, FinTechs, which cannot lend directly, can get the clients for the banks and give services like sourcing loans, monitoring, pricing, and recovery of loans. And if the loan goes bad, guarantee a percentage of the loss. Previously, there were cases where some FinTechs gave FLDG up to 80%, which could never be serviced. So now, RBI has allowed FLDG arrangements, again, subject to certain conditions. Maximum FLDG default cover of 5% by the FinTechs and to be invoked by bank or NBFC within 120 days of loan going overdue. So let's understand the cycle in a nutshell. Clients with limited credit history or insufficient KYC approach FinTechs for loans. FinTech check their alternate data set and in turn approach the REs, that is banks or NBFCs, for the loans with a FLDG of 5%. Guarantee in the form of cash or bank guarantee or FDs, and REs will underwrite and lend the loan to these clients. So it's a win-win situation for all. Bank or NBFCs and FinTechs need each other's support to deepen credit in India. With FLDG coming back, India's credit story is making a comeback. Note, This is probably why Paytm stock has been bullish. It can be the alternate lending player in India. Let us know in the comments below your views on FLDG. Hope you liked the video. Don't forget to like, share this video and subscribe to the ICICI Direct YouTube channel. Thank you.
Investments in securities market are subject to market risks. Read all related documents carefully before investing.